One wrong sentence during the showing, one skip inspection, or one contract detail you miss could cost you thousands or even the entire house. The Las Vegas market in 2026 is giving buyers more negotiating room than we've seen in years, but that doesn't mean you can get careless. My name is Chris with the Quiazon Real Estate Group, and these are the 10 expensive mistakes that I'm still seeing homebuyers make and how you can avoid them. Whether you're a first time homebuyer moving from California, relocating for work, or buying your next home in Vegas, this market is very different from the crazy sellers market we had a few years ago. There's more inventory, homes are sitting longer, and sellers are more open to negotiating. That's good news for buyers, but only if you know how to protect yourself. Because in a shifting market, the buyers who win are not always the ones with the most money. They're the ones who are prepared, strategic, and know what not to say, skip, or sign. So let's go through the 10 most expensive mistakes Las Vegas home buyers need to avoid in 2026. Mistake number one is getting emotionally attached and saying, "This is my dream home." Here's why you want to be careful with this. The second you say something like, "This is my dream house, I have to have this one," or "I can see already my family living here," you may be giving away your leverage. And I'm not saying you can't love the house, you should love the house. But during a showing, especially around cameras, ring doorbells, open houses, or listing agents, assume everything you say could eventually get back to the seller. If the seller knows you're emotionally attached, they may feel less pressure to negotiate on price, repairs, closing cost, or other terms. In a market where buyers have more options, don't accidentally make the seller feel like you have no other options. Stay calm, stay neutral, talk strategically with your agent privately after the showing. Mistake number two is criticizing the house out loud. This is the opposite side of the same mistake. Some buyers walk through a property and start saying things like, "The kitchen is ugly," "Who picked the flooring," or "This house needs way too much work." Even if those things are true, be careful how you say them. A lot of sellers are emotionally attached to their home. Maybe they raised their kids here, maybe they picked those finishes themselves, maybe they spent years improving that property. If your comments get back to them, it can make the seller defensive. And once that happens, they may be less willing to negotiate repairs, concessions, or price. A better approach is to stay professional during the showing, take notes, and then discuss the issue privately with your agent. You can absolutely use condition as a negotiating point. Just don't insult the seller's home while you're standing inside it. Mistake number three is revealing your full budget or pre approval amount. This is one of the easiest ways buyers give away money without realizing it. If you tell people, "We're approved up to $700,000 or we can go as high as 650K, you've just revealed your ceiling. And once the other side knows your ceiling, the negotiation can start moving toward your maximum instead of towards the best possible deal. Your pre approval is not your shopping target, it's just the lender's maximum based on your finances. What matters is your comfort zone, your monthly payment, your cash to close, your reserves, and how much risk you're willing to take on. Keep your real numbers between you, your lender, and your agent. Let your agent negotiate based on property's value, condition, days on market, seller motivation, and comparable sales, not based on the highest number you technically qualify for. Mistake number four is skipping a full professional inspection even on a as is sale. This one can get very expensive. A lot of buyers hear "as is" and think it means they should inspect the property. That is not true. "As is" usually means the seller is saying they don't want to make repairs. But that does not mean you should waive your right to understand what you're buying. A property inspection can uncover roof issues, AC problems, plumbing leaks, electrical concerns, foundation movement, pool equipment problems, or signs of unpermitted work. And in Las Vegas, this matters even more because of our extreme heat, dry soil, hard water, and older AC units can create expensive repairs. This is one of those mistakes buyers usually don't feel on closing day. They feel it 3 months later when the AC goes out, the roof leaks, or the repair quote comes back at $20,000. Even if you buy the home as is, inspect it fully so you can make an informed decision. Mistake number five is ignoring open permits and seller disclosures. Do not just skim the disclosure and assume everything is fine. Seller disclosures can reveal roof leaks, insurance claims, plumbing issues, past repairs, appliances problems, solar agreements, HOA problems, pest issues, and more. You want to read every page. And when it comes to permits, this could be a major issue in Las Vegas. If a garage conversion, patio cover, pool addition, electrical work, or major remodel was done without proper permits, it could create problems with financing, insurance, resale, or future repairs. This does not automatically mean you should walk away from the house, but you need to know what you're buying before your due diligence period expires. Have your agent help you review the disclosures, ask the right follow up questions, and check available permit history when appropriate. Mistake number six is not checking your flood zones and insurance history early. A lot of people don't think about flooding when they think about Las Vegas. But we do have flood zones, drainage areas, washes, and neighborhoods where flood insurance may be required or strongly recommended. And that can affect your monthly payment. Before you get emotionally attached to a home, check the FEMA flood map. Talk to your insurance agent and ask questions about prior insurance claims or property damage. Insurance has become a much bigger part of the home buying conversation in recent years, depending on the property, past claims, location, roof condition, plumbing, or other risk factors. Your insurance quote could be higher than expected. And if your insurance quote is much higher than you plan, that can affect your affordability. So don't wait until the last minute. Get insurance quote early during your due diligence period. Mistake number seven is not shopping for mortgage rates and loan terms the right way. A lot of buyers make the mistake of talking to one lender and assuming that's the best deal. But even a small difference in rate, lender fees, credits, mortgage insurance, or loan structure can make a difference over time. You should talk to at least two or three lenders before you start writing offers so you understand your options. Then, once you're under contract, compare the actual loan estimates carefully. But here's the warning: don't only chase the lowest rate. You also need to look at lender reputation, closing speed, communication, fees, and whether that lender can actually perform within the timeline of your contract. And whatever you do, don't open new credit, finance furniture, buy a car, move money around without explanation, or make large purchases before closing. I've seen buyers almost lose homes because they made one financial move at the wrong time. Before you do anything that could affect your credit, your income, your debt, or bank accounts, ask your lenders first. Mistake number eight is failing to review HOA documents, fees, reserves, and rules. This is a huge one in Las Vegas because so many homes are in HOAs or master plan communities. Do not just look at the monthly HOA fee and move on. You need to review the HOA documents, rules, budget, reserves, meeting minutes, insurance information, pending lawsuits, violations, rental restrictions, pet rules, parking rules, and any potential special assessments. This matters even more with condos and townhomes because HOA's insurance, reserves, lawsuits, and special assessments can affect your loan approval and your future resale. A low HOA fee is not always a good thing if the association is underfunded, and a beautiful community can still become a headache if the rules don't fit your lifestyle. So before you remove your due diligence contingency, make sure to review your HOA package and ask questions. Mistake number 9 is buying a home with leased solar and not understanding how the contract is structured. Solar is everywhere in Las Vegas, and it can be a great benefit when it's structured properly. But leased solar is very different from owned solar. If the panels are leased, you may be taking over monthly payments, a long term contract, annual increases, transfer requirements, maintenance rules, or restrictions that could affect your future resale. Some buyers only focus on the lower power bill and forget to ask, what is the actual contract I'm inheriting? You need to know whether the system is owned, financed, leased, or under a power purchase agreement. You also want to know the monthly payment, remaining term, transfer process, production history, roof impact, warranties, and what happens if you sell the home later. Solar is not automatically good or bad, but the contract matters. Do not fall in love with the idea of solar without reading the paperwork. Mistake number 10 is not protecting yourself with title insurance and not spelling out what stays with the house. This mistake seems boring until it becomes expensive. Title insurance protects you from certain ownership problems, liens, unpaid taxes, recording errors, fraud issues, or claims against a property that may show up later. Most buyers focus on the lender's title policy, but you also want to understand the owner's title policy and what protection it gives you. And the second part is just as important. Put everything in writing. Do not assume the refrigerator, the washer, and the dryer, water softener, security cameras, garage racks, patio furniture, TV mounts, or smart home equipment are included. If it matters to you, it needs to be written in the contract clearly. Verbal promise do not protect you at closing. So those are the 10 expensive mistakes home buyers in Las Vegas need to avoid in 2026. The good news is this market can actually be a great opportunity for prepared buyers. More inventory means more choices. Longer days on market can mean more negotiating power, and sellers may be more flexible than they were a few years ago, but only if you know what you're doing. The buyers who win in this market are the ones who stay calm, ask better questions, inspect carefully, protect their financing, review the documents, and negotiate from a position of strength. If this video helped you even avoid one of these expensive mistakes, make sure to hit the like button, subscribe for more weekly Las Vegas real estate tips, and comment checklist below if you want my 2026 Las Vegas buyer checklist. And if you're thinking about buying a home in Las Vegas this year or sometime in the future, make sure to reach out before you start touring homes so we can build the right strategy before emotions, contracts, and deadlines get involved. I'll see you on the next one.